Hi, thanks for seeing this video. My name is Suveer Chainani and I'm the CEO of Institutional Clients Group at Emkay. I joined the firm 3 months ago and it's a pleasure to be on air and talk about what's going on in the company. So I'll talk about a few things. First of all, what we're doing in our research and equities team, and secondly, what we're doing in our investment banking side. I'll talk about my top-down view on the markets and some of our stock picks, etc. So let me start by what are the key initiatives we are doing on our equity side of our business. Three things. Basically, Emkay is very well known for its width of the coverage that we provide to our clients. What we are doing is we are adding a big dimension of depth to our coverage and a very critical alignment of goals. I'll talk about that, what it means. But width, to give you a point, we cover around 250 stocks. Hard coverage in the Indian market, and on top of that we've got 100 more to cover on a soft basis, and this coverage will only grow. So we are a very critical partner of our clients who are looking at India and who need 200, 300, 400 stocks under coverage. That's the width part. The second is the depth part. The way the promoters and our strategy is rolling out is that we want to be also known as a high in-depth expertise-oriented research coverage, and you will see more on this in coming months, that how we stand out in terms of our depth of our stock coverage of our universe. The third and the very interesting point that has been my baby for years is this alignment of goals, i.e., who are our clients, what do they need, and how are we helping them do that. So if you look at the global asset management industry, the main objective that they exist today is to beat the benchmark, which is create the alpha. But unfortunately, if you look at the developed markets, most of the active money managers are losing alpha, i.e. they're not able to beat the benchmark. And even in India, there is episodes of last 1.5 years of underperformance. So we have taken that goal right onto our foreheads and saying that we want to help our clients deliver alpha, and therefore the way we communicate and measure ourselves is quite in line with how our clients measure themselves. So there is an initiative called Emkay Alpha portfolios, which really means that each one of our writing analysts take in their stocks under coverage, pick up their benchmark weights of those stocks, and then assign their own positive or negative view on those stocks, and therefore create their own artificial model portfolio, if you will, or their own portfolio based on an Excel. And then we compare this with an equal weighted, say, BSE 200, again artificial benchmark, if you will, the ETF as we call it. So for example, if on the consumer space, Ashit is our analyst and he covers, say, 20-25 names. He will pick up the BSE 200 weights of those 20-25 names, create an ETF out of that, and then create his own EAP for a consumer and see the performance of that. And the degree with which we are measuring ourselves and communicating is very rigorous, as in Ashit will publish, anytime he changes his view on a stock, he will publish a report. He'll update his model portfolio, and for his NAV calculation, he will use the next day's VWAP price to make it as realistic as it can in the real world situation. And then we will measure ourselves on a 3 months, 6 months, 12 months and 2 years basis and try to generate alpha. The main message here is that we hope to generate alpha, but the main message is that we will be conscientious of our views, and we will also face the same challenges that our clients face when their portfolio moves up and down vigorously. For example, when a stock goes down, what do? Do you buy more if you're positively oriented, or you change your view and sell on the next day? So things like these. So if you look at our EAP product, you will see 19 such portfolios, one each for each of our analysts, and they will start measuring themselves starting 1st of April. Now, these 19 portfolios have high conviction ideas within them, which are big overweights and underweights with respect to the benchmark weight. And this becomes a strong communication tool for our clients through our sales force, etc., that this is where our big bets are. Now, there are two levels of further abstraction of these. One is that can we make an India portfolio out of these 19 sector portfolios? So our head of research will make an India Nifty benchmark portfolio, taking into account the top ideas from these individual 19 portfolios and make a, say, a 40-50 stock portfolio which is benchmarked against the Nifty. And the second is, our mid-cap specialist will make a portfolio which is pure mid-cap, small and mid-cap portfolio consisting of concentrated bets on 20-25 names, where he will measure himself against BSE 400 small and mid-cap index. And the final way of manifesting this view is our high conviction ideas, so which are our top high conviction large cap buys, 5 to 7 large cap sells, and again 10 small and mid cap buys. So I would encourage you to look at our EAP report and see these 3 levels of abstractions, which is individual model portfolios, which are 19, the India portfolios, which are 2, the Nifty one and the small and mid cap 400 one, and the third is our high conviction lists. This is on our equity side, which is having a width, having depth, and aligned goals through EAPs. Our second initiative is what we're doing on our investment banking side. So we are having 200, 300 connections in the Indian economy through our stock coverage, and what we would going forward aim to achieve is to provide equity raise capital services to our corporate clients in a very win-win manner, which is fair to our corporate clients and institutional investor clients. End of the day, the whole infrastructure of secondary markets exists to give liquidity to primary investors. The main purpose is primary investors providing equity growth capital to corporates, and which is where our investment banking services come into play. So if you ask me, really exciting times for us in the future, where we're doing some material refinement of our strategies for our equities business and or our investment banking business. Apart from that, you would have had seen we are having a build out of our wealth business, which is an organic growth, and our AMC business. With that, I will segue into my view on the markets and some of our topics. So if you look at markets have been bidded up. There was a consensus feeling that elections is going to be the worst time, and more often than not, consensus never works. So as we saw that markets have been bidding well, if you look at kind of positioning that clients have. So, on one side, we are seeing foreigners being very positively oriented. In fact, this morning I was updated that foreigners into the results and the upcoming elections is most bullish it has been in the recent past. And on the other side, we are seeing that the HNI and the retail are trying to get more constructive. So it's a very good setting wherein one big component of the market is positive and the other one is trying to become positive. So ballpark positively oriented towards the result season and the election season. If you look at the macro, yes, oil is a worry and we will keep an eye. But if you look at the Indian specific inflation that we are running, it is very benign. 3.5% versus a repo rate of 6% leaves us with around 300 bips of real rates, which is a big cushion for us to live with. So the macro setting is quite constructive, and we therefore are constructive into the market. So some of our topics are Reliance Industries. I can talk at length about that, but basically the company is really transforming itself into a new age businesses, be it telecom, be it consumer services, etc. We are also positive on HCL Tech. There is a big consensus feeling that the recent deeds it has done is not good, but our view is that no, the IBM transaction will work in favor of HCL Tech, and meanwhile its infrastructure business service is looking up. On the negative side, staying on the positive side, we also like ACC as one of our top picks. M&M, etc. are also our topics. On the negative side, we do not like ITC. That's a bold call. It's a contrarian call. Our analyst Ashit initiated with a sell on that name, and the main argument is that the cigarette prices are really crowding out itself from the consumer wallet, and like that we've got negative view on Eicher Motors and Ashok Leyland. That's all I had to say for now. It is great interacting with you. Thank you.